Good morning, good morning, good morning, everyone out there. Welcome to Make Homes Possible. We are going to be doing a live counseling Q&A today, so make sure you're dropping in your questions. We are here to help you. Hopefully you have heard about us, but if you have not, let me introduce myself. My name is Shantae Patton Golar. I am a 18-year veteran of the real estate business, but I am also a housing counselor and the branch manager of NID Housing Counseling Agency of Southern Nevada. And we are one of many coalition partners in Make Homes Possible. Make Homes Possible is going to be celebrating its 1-year anniversary. It was over a year ago that a group of community leaders got together and decided that we were going to be intentional and make that big goal of putting 25,000 Black families in homes in Southern Nevada. Now, our program is open to everyone, but we know that the statistics have shown us that 44.1% of Black households own houses. That is very disappointing because on the flip side of that, 74% of white households own houses. And our 44.1 number percent is less than it was prior to the Fair Housing Act and prior to the Civil Rights Movement. And so we're in crisis mode right now, right? And so we've taken the time to say, with our collective impact and knowledge, we can do our part to put 25,000 Black families in homes. And so we do that by multiple ways. One of those is through housing counseling. And so when you sign up for a masterclass at makehomespossible.org, you will then be given to one of our counseling agencies, which could be NACA. It could be my counseling agency, NID Housing of Southern Nevada. It could be Neighborhood Housing Services of Southern Nevada, or it could be Nevada Partners. Those are our housing coalition partners that will counsel. We also have AmeriFirst Financial, which is a lending partner of ours, and the Urban Chamber and many others. And obviously, one of our biggest supporters and thought leaders and leaders of the coalition, Homie, which is a tech-based real estate company. So we all got together and we said, with our collective years in this business, and we understand the impact of home ownership to generational wealth. And we understand that by 2050, statistics say that the Black community will cease to have wealth at all, unless we can change the trajectory of our lives. And we do that through home ownership. So we want to welcome you all today. We are going to be discussing real estate Mythbusters. And in a little while, one of our partners, Lisa Foster with AmeriFirst Financial, is going to come on, and she'll be here to answer any of those loan or mortgage questions that you might have. So we are monitoring the chat. Make sure that you drop your questions here. We're here for you. This is very informal. We're just here to answer the questions for you today. So let's go over the real estate Mythbusters. The first one is renting is cheaper than buying. If you guys have seen that recent article that Channel 13 did a couple of days ago, one unfortunate woman had her rent go up $600 when it came time to renew. And it was just an apartment she was paying almost $1,800, and so we see it, and it's very clear, right? Mythbuster number one, renting is cheaper than buying. No way, because you are paying a mortgage. It's just not yours, right? You are paying your landlord's mortgage, and they are the ones benefiting from home ownership. They are the ones benefiting from the equity, the write-offs, but you are paying a mortgage. Whether it's your mortgage or someone else's mortgage, you are still paying a mortgage. So we need to get it to where this is your mortgage you're paying. This is your equity. And what's more important than anything, that you get to determine when you need to move. if ever, not a landlord who's decided to go up on the rent, not a landlord who has decided to sell their home, which many of you have experienced in this market. You know, you don't have to do that. You get to determine when your family gets uprooted and not someone else. So renting versus owning, you can't change anything. You have no sense of ownership, which means your children have no sense of ownership. Landlord collects your money, pays their mortgage. The rent goes up like we are seeing in this market. There's the instability of not owning a home, right? You don't, if your children have gone to this school, you know, for their whole lives, and now the landlord decides to sell and you can no longer afford that neighborhood. Now you're uprooting your children, yourself. It's further away from your job. Who knows? It's all these possibilities. But the benefits of owning: freedom to make your changes. That's changes to your lifestyle. That's changes to the home. Pride of ownership, building the equity in real wealth, right? Tax benefits, the payments remain the steady, right? I am a homeowner. So unlike renters right now, my mortgage is the same. It cannot go up. It could potentially go down depending on opportunities for interest rates to go down, but my mortgage will stay the same. So it's that sense of knowing the consistency, and I won't experience instability as quickly as someone who is renting. So your payments remain steady. You live free with no restrictions. If you want to, you know, paint your kitchen yellow, you can do that. You know, whatever it might be. If you decide you want to knock a wall down and build a whole gaming room, you can do that because it's completely up to you. And with community equals stability. Neighbors, being able to know that you'll be there for a long period of time as long as you choose to. Okay. So as my personal story, renting versus owning, I bought a house with just as little as $700, ended up paying about $1,700 a month. At the time, I was already renting $1,500. And then my landlord decided to sell the house. And then I was a single mom, 3 kids, and all of a sudden we had 30 days to pack up and move. And I did not want to do that ever again. So at that time, I owned a home. I had tax write-offs. I had $56,000 in equity. It was 24 months ago, almost a year ago, that I sold that home that we're talking about. I made about $80,000 off of it and was able to buy a bigger home in an area that I was trying to get into. You know, so a lot has changed, and now my family has an even greater opportunity for wealth than what we had before when we were renting. So here's the Mythbuster again. Number 2, you need 20% down to buy. Stop listening to your friends. They don't know. Stop listening to other people. You do not need 20% down. If that was the case, very few people would actually own a home, right? So the lies you tell, that is not true. Okay. You do not need that. You can get into home ownership as low as 3.5%. And let me tell you something, with the programs that we introduced to you all through through our coalition, these are not new programs, right? We did not create something amazing. What we did was decide that these programs were here, but the community didn't know about them. And so the only thing we're doing is bringing them all to you and walking you through the process to use the programs that everyone else is already using. You know, so this isn't something brand new. There is no catch. These are government programs that have been put in place for you, but you just have not known about them. And so we are here to ensure that you understand what they are and that you get the benefits as well. Okay, so the next one, personal property builds wealth. We love a good car, right? But that car payment is detrimental to our homeownership goals, and it is detrimental to our income and everything else. So personal property does not build wealth, right? It drains wealth. Those shoes, I love a good shoe. I love a good red bottom, just like the rest of them, you know, but I do understand the house has to come before the personal. And then with that house and the equity, I can then fund my personal life, right? But I've got to get the wealth first in order to fund the life. So that is one of the important things. Okay. Personal property does not help stack wealth. Equity stacks wealth. And wealth is what we can pass on to our kids. If you are trying to pass on red bottoms, you better hope that they can do something with them and hopefully they can fit them, because that's the only way to pass it, and it's not wealth, right? It is just really nice, beautiful shoes. So stack your savings to build wealth. Oh, I see Lisa Foster has come. Let's bring you to the stage, Elias. If you can bring Lisa to the stage, that would be perfect. Welcome, 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 Lisa Foster. In addition to being the loan genius, we call her the loan whisperer. And I also says that she builds down payment assistance like a birthday cake, layer on top of layer. She will find a way for you to get down payment assistance from the state of Nevada, and then down payment assistance from Chenoa funds, and she'll layer this on top of this, on top of this, and whatever else she needs to do to get you into home ownership. So I asked her to come on here and help me kind of do a Q&A. She is the loan whisperer. Drop in those comments right now. We just got done talking about, do you need 20%? We're going to talk about student loans. I know some of you have student loans. It's big in our community. It is detrimental to our community. Drop your questions in there about the student loans, about bankruptcies, foreclosures, whatever that looks like. Drop it now and we will get to it. So stacking your savings to build wealth is always important, right? So, but you have to get help to do that faster. And we are that help. You can get down payment assistance on there. So we'll tell Lisa, you are the down payment assistance queen. I am certain of it. Lisa is also my own personal loan officer. She helps me finance every single one of my houses. And so she is the queen, and I love a good down payment assistance program, honey. So Lisa, tell us about down payment assistance and what's available out there.
So everything that you see on the screen, for the most part, is currently available. Each one of these is funded and managed by a different organization. For example, Home is Possible is through the state of Nevada. So that is a program that will assist you with your down payment and your closing costs. And it gives you a couple of options and different ways to do that. They also have Home is Possible for teachers. For those of you all that are committed to our youth, we thank you, because we're clear it is a struggle sometimes. I think that COVID taught parents that their children are not the angels they thought they were. We also have Home is Possible for Heroes, for our veterans that have served or are currently serving. Thank you for your service, but we absolutely have options through the state of Nevada through their Home is Possible program. Nevada Partners focuses on the culinary. So if you are a culinary member, they have unlimited funds for your use in purchasing the home. Neighborhood Housing Services focuses on that wish. Wish will be out typically in the beginning of April, and it typically runs out until October. And then Chenoa Fund is a fund that is actually filtered through lenders here in the state of Nevada. So all of these programs can actually be utilized to help you get into home ownership. So, you want to make sure that you're reaching out to, I'm sorry, you all, you can tell I'm home. I apologize. You want to make sure that you're reaching out to your local nonprofits, NID, NHSSN, Nevada Partners. You want to make sure that you're reaching out to these nonprofits to see what you qualify for. And you're partnering with a lender that is familiar with using down payment assistance. There's a lot of rules and regulations, and we want to make sure that we set you up for success. So if you have specific questions, go ahead and drop them in the chat. I'll be happy to answer those. And Shantae, back to you.
All right, and we are going to dive deep into there. Also, no, you don't have to contact every single one of these agencies to learn about those particular programs. All you need to do is sign up for a one-on-one coaching session, get some housing counseling, and we will review each of those down payment assistance programs with you. We will calculate your income, determine based on preliminary looks which programs you would be able to qualify for. Then once you get with your lender, they'll be able to help you process getting that down payment assistance as they're doing your loans. So definitely check that out. Nevada Partners, NHSSN, Lisa's company does Chenoa funds. It's not on here, but NID, My Housing Counseling Agencies, we also process the WISH down payment assistance program. So we are 100% there for you. Now let's go on through this. Oh my goodness, another myth buster. I'm not a first time home buyer. That's all right. You don't have to be. If you haven't owned a home in the last 3 years, guess what? You are a first time home buyer. You didn't know that, huh? They don't tell you all the information. You are a first time home buyer. And let you know, you do not have to be a first time home buyer to get some of these programs. Not all of them have the requirement that you be a first time home buyer, right? So that's the importance. Give it a housing counselor so we can go line by line and tell you what the requirements are. Mythbuster number 4. I can't buy due to foreclosure, bankruptcy, or short sale. Lisa, how many people have a foreclosure, bankruptcy, or short sale? I could tell you right now, I have 2 of the 3 on there. And I am a homeowner and I will
Several
continue to be
times
a
over.
homeowner,
Several
right?
times over.
So we all get into situations where we have a stumbling block, and sometimes that season lasts a couple months, sometimes it can last for years, and we know that, right? But bankruptcy, foreclosure, short sales will not stop you from home ownership. There are some time frames on it, but it's not what you guys think it is. Tell me a little bit about that, Lisa.
So for a bankruptcy, you can purchase using FHA financing 2 years after the date of your discharge. Foreclosure is 3 years. And a short sale is also going to be considered a foreclosure, which is a 3-year wait period. Conventional wait period is a little bit longer. But again, you can actually purchase if you're a veteran, technically you don't even have a wait period. If you finance with the VA, the home went into foreclosure at some point in time, that doesn't mean you cannot use your VA entitlement again. So never think that due to foreclosure, bankruptcy, or short sale, you can't be a homeowner because that's simply not true. I see we have a couple of questions in the chat. Do you mind if I grab one of them that's pertinent?
Yes, let's see. So the first one is what to do if your debt to income ratio is high due to student loans? Great
So
question.
there were some recent changes to the student loan rules on FHA. So here is the deal. Your student loans have to be in a repayment plan, in an income-based repayment plan, regardless of the government forbearing them until I think it's October now. Regardless of whatever the government does, a lender is going to require you to be in an income-based repayment plan. As long as you can document you're in an income-based repayment plan, we can use that payment to qualify you. So I have a young lady who has a PhD with over $200,000 in student loans, and we are using $150 a month to qualify her because she's in an income-based repayment plan. So the goal is to make sure you reach out to your lender. I know servicing has changed, it's been a little difficult. Reach out to your lender and get into an income-based repayment plan and stay in that plan. Complete it, renew as you're supposed to, and we're able to use that payment.
And let me tell you, when someone comes to housing counseling and they say they have 150, $200,000 in student loans, we don't even blink because you do not understand, especially in the Black community,
Mhm,
student loan debt is high, right?
mhm,
Especially for Black women, because we have spent a lot more time focusing on, our education and our career. And because of that, we have some of the highest student loan debt because we are educated, right? But that should not be one of the reasons why you get discarded to the side and you cannot get home ownership. So believe me, a couple $100,000 in student loan debt does not scare us. You are not the first person, and it is quite common out there, especially for our Black women. So we are not scared, right? Bring it to us. There is a solution for all of it. The other question is, I declared bankruptcy 2 years ago. Could I still qualify for FHA or conventional loans and down payment assistance? Can you just circle back to that one again, Lisa?
Yes, you would qualify for FHA and any down payment assistance program that layered with FHA. So
Yep.
your 2-year wait period is over. It's 2 years from the date of your discharge. So as long as you've met that requirement, you've reestablished credit, you absolutely would be able to qualify for financing.
Yep. Call us, girl. You ready? Don't rent anymore. Your 2 years is over. You are not going to be penalized anymore. Okay, wonderful. So we have a question, Lisa. How can you qualify for more funding if you face those roadblocks, like
Which
student
robot?
loan and bankruptcy? So can you hit us up, Alexis? Let us know which specific roadblocks are you talking about, and we'll circle back to you. I
Mhm.
have another one. Oh, thank you so much for being a teacher. Please take your kids back. We do not want to teach them anymore. We believe you now when you told us that they didn't act right in school. They don't act right at home either. Please take them back. But thank you for being a teacher. Will a repossessed disqualify you for a loan? I have an appointment with NACA next month.
NACA has its own set of rules, but typically a repossession will not disqualify you from a loan. Depending on what type of loan you get, will determine how we handle that repossession. But a repossession will not disqualify you. What we're really looking at is what are the trends? You know, what have you done in the past? What are you doing currently? Are you trying to show that your credit worthiness? One of the things that I try to explain to my clients is, listen, you're asking somebody to loan you several $100,000 worth of, money on your one promise that you're going to make a payment every month for the next 30 years. And that's a hard sell to someone who makes the lending decision. If you didn't pay Cox, they $83, or you didn't return their box, or you owe every phone company in the world. You went to Sprint, AT&T, T-Mobile. You done been through the whole gambit, and you just running off with these iPhones. So, you've got to think about what we're looking at. We want to make sure that you're able and committed to your home ownership, because we don't want your home. That's a fallacy that mortgage lenders are out to take your home. We do not want your home back. We want you to stay in that home, and we really want to set you up for success.
They don't want your home. They're not in the business of buying houses. They're in the business of giving you money that they can get interest off of so that they can turn their money around and do other things with it. They do not want your house. The house is of no value to them unless they can get their money back. So don't worry about that. They don't want it. So let's circle back. The roadblock is student loans. So the original question, how can you qualify for more funding if you face those roadblocks? I think we answered that, which is income-based repayment plan. We only go based on your monthly, so if it's $10, if it's $120, that's the only thing that's being counted against you, not the full $200,000 that you might owe. Okay, so keep your questions coming in. We're going to hit that next myth buster. 3 years is the magic number. Okay, so Lisa, let's let them know about that. You said at the very longest, 3 years for conventional,
No,
but 2 years, 3 years
conven-
if you have a short sale.
correct. Conventional, when you're talking about a foreclosure, it's going to be 7 years, because foreclosure is much more restrictive than FHA. But FHA is really your most forgiving lender. So as long as your bankruptcy is seasoned at 2 years, your short sale and foreclosure is seasoned at three, you're good to go.
So
And
three,
let me add one more
you're
really
good.
special
Yes,
thing.
please do.
If you're in a chapter 13, which is the
Oh,
bankruptcy where you
yes.
consolidate all your debts, listen, you can purchase after 1 year of making on-time payments to the trustee with the court approval. So you can actually buy or refinance your home while you're in that chapter 13, as long as the court approves it and you've made your payments on time.
That's a good nugget. Take that with you, because a lot of times when we talk about bankruptcy, we're talking about chapter 7. But there are some people who are in a chapter 13, and that's a whole different game. But in a sense, you're almost a little bit better because you only have to make a year of payments as opposed to a chapter 7. It lets you wipe out your debt, but then you have to wait for 2 years. Right. So we want to talk about those things. This is the end of the Mythbusters. If you guys have some questions, drop those in there. But in the meantime, let me share a story with you, right? We love a good story, but I am going to share with you my personal story so that you can understand the struggle, but then the success on the other side of it. Okay. I was married at 18, right? I know I look 18 now, but don't worry, I'm not, right? So I was married at 18. I stayed married for 16 years, and I had 3 children. During that time, though, I still am a full-time agent, but real estate looked different back then in the beginning. And when the market changed, so did my income, right? So I tried to short sell. I wasn't able to. So instead, I had to let it go through foreclosure. This is way back when the market had flipped. So I had to let it go through foreclosure. So now I have a foreclosure on my on my credit report. Then on top of that, I had a first and a second mortgage. I don't know if you guys were here in this real estate market back then, but they were doing first and second mortgages. The second mortgage then tried to come after me. Even so, then I was forced to file bankruptcy. So now I've got one struggle foreclosure, second struggle bankruptcy. I would have taken the short sale, but I didn't get that. You get one or the other. So I literally then had a foreclosure, then a bankruptcy. So then I was stuck with home ownership, right? From home ownership for a couple years. Then when year 16th of marriage happened, then I found myself divorced, single mother, three children, three very small children, one with autoimmune disorder. So I was just choosing all the struggles, right? And I had to rent for the very first time because I bought into home ownership. I came from a family of homeowners. So I bought my first house at 21. It wasn't in the neighborhood that I wanted. So since 21, besides that time frame that I didn't own, I've been hopping into new houses and purchasing and getting the equity every 2 years since I was 21, and I will be 40 in April. So I've been doing this, and that's with foreclosure, bankruptcy, all of it. And I'm still moving forward with it, right? And so that's why I'm telling you that you can come back from this, right? So I had to go. The market was already coming up. It was more than what my single commission only income could handle. So I thought I was going to live north of the 215, right? Because that's where I had always lived, but that was a two income household. So I couldn't get in that area, but I was faced with a decision. I could either continue to rent until I don't know what happens, that I think I'm going to be in a different situation so I could live where I wanted to live, which was north of the 215, right? Or I could buy, get in a real estate game, get on the monopoly board so I could start accruing equity. I bought that house. Lisa was my lender. March 2019. I sold that house April 2021. And, at that time I had kids sharing rooms and everything. And I have now bought a house in abundance. I don't even need this amount of space at all. But I had to go through and trust the process. I use the same systems we're telling you about, the same processes, the same people. I did exactly what we are telling you to do. So trust me when I tell you there is a way for you. Lisa, I have good credit, but I have a lot of credit by my credit card, but my credit card debt is below 30%. Could that be a bad thing? So she's got good credit, but she has a lot of like credit cards, debt, but they are all below 30%. What's
That
your advice for her?
that should help your score. But remember, we're going to factor in a payment on every single one of those credit cards for you to qualify. So the question becomes, do you necessarily need all those credit cards? Could you pay a couple off? It's going to depend on how much income you have
Ooh,
coming
but
in.
don't close the credit. Tell her,
Oh,
Lisa, don't close
hold
that
on, hold
credit
on.
card account though. Don't
Listen,
close the account.
let me explain to you all. When you've had credit cards and you've had them for extensive time, 2, 3, 4, 5, 7 years, and you close that card, you now basically are removing that card from your credit score. So you're taking a perfectly great a credit card with longevity, and you're taking it out of your credit score, so your score will drop. Pay the card off, leave the card inactive, use it every blue moon so they don't close it, and then pay the balance off. If you've been behind with your credit cards, what you want to do is catch it up. Make the minimum payment or a little bit over the minimum payment on time so that you create now a history of making those payments on time. Just don't catch it up and pay it off, because that doesn't show that you're back in the habit of making your credit card payments. We always want to see that the intent is there for you to make your payments in a timely fashion. So
So I've
that
got
would,
a few, I've
I'm
got
sorry,
a few other questions. Um, but one of the things that I know is out there and we did not address is a couple things. What if you were laid off through COVID? So you're back to work now, but you were laid off. Will that affect your ability to purchase a home?
If you were laid off during COVID and you work 40 hours a week and you are back to work, it depends on number one, how long were you laid off? If you were laid off more than 6 months, then we want you to be back to work for 6 months. If you do not work 40 hours, then yes, the COVID layoff will impact your qualifications because we have to average your income. If you work a straight 40 hours, then we can use, and you've been back to work for 6 months, then we can use that 40 hours to qualify you. It just depends on your circumstances.
Perfect. We've got a question. How long do you have to be on your job in order to qualify? So can you give them the difference between on your job at this particular company, but you've been in the same business for the whole time? What does that look like? Or you
So
just started working a whole new industry?
right. So, what lenders look for is income continuity. We look for you to have a 2 year work history. You do not necessarily have to be on your job for 2 years, but we're looking for you to at least have been in the same field unless you've advanced for some reason. Maybe you went to school, got your degree, now you're working in your field. What we are careful, what concerns us is when you were a beautician on Monday, you're a prep cook on Tuesday, you're a cleaner on Wednesday. There's no way for us to calculate that income and predict what it's going to be to make sure that you can make your payments. So just know that whole thing, you got to sit on your job for 2 years. That's not the truth. We do need you in the workforce for 2 years. We need you to have a 2 year work history, but we can utilize that if you've made moves and you've stayed in similar jobs or similar positions.
Okay, but we also know that in our community, we love a good side hustle. So tell them if they might have had a side hustle, maybe you work this job, but you do hair on the weekends, and maybe it's not in the shop. What about that and taxes? How will you determine if you can use that extra income for them?
So the way we determine whether or not we can use the side hustle money is whether or not you actually put it on your tax returns and reported it to the IRS. If you did not report your income to the IRS, number one, then we will not be able to use it. If you don't have a 2 year history of doing an independent side hustle, 9 times out of 10, we will not be able to use that income.
Understood. Okay, so next question, for the real estate agents out there, one person, 40-year real estate veteran, how can you help? Go to Make Homes Possible, send an email. We are currently working on building out a membership so that we can vet everyone and get a nice list of real estate professionals in all industries that we know will hold the hands of our community and walk them through the process. So go to makehomes.possible.org. In addition to that, there was a question on how to get into the masterclass. Go to makehomes.possible.org, sign up for the one-on-one coaching, and that'll be where you can start with it. Okay, so those are the questions from there. Is there anything else we can drop a nugget on? We talked about COVID, we talked about the student loans, we talked about unemployment a little bit. Once you are back to work, look, if you didn't tell the IRS about the money, you can't tell us about the money, right? That's just what it comes down to. It. If you didn't pay taxes on it, we can't consider it. So keep that in mind. Keep your credit card and your credit card debt under 30%. Say, for example, though, Shantae, my car broke down and I had to put something really expensive on my credit card, but it was only because I wasn't going to get paid, until Friday. Well, look, if you have the money, pay attention to your statement date. Okay. Pay attention to the statement date. If your credit card says your statement date is from December 30th, to January 31st, then that's the statement date that will post whatever your account balance is at that time. So if you can get your paycheck and you can pay it down to 30% before that credit card statement date hits, you're golden, because it will post what it will report to the credit bureau, whatever your balance was at the end of that statement date. So we know sometimes things happen in the car, whatever it might be. Just make sure that you are paying attention to every single one of the statement dates on your credit card statement. And that is a way that you can kind of play a little bit with your credit cards, but still keep your balance reported to the credit bureau under 30%. One more question. I'm in limbo right now because as a small business owner, my net income was not reflecting my gross. Making over 100,000, I'm purposely paying myself to get the mortgage approval I want. Any advice on that, Lisa?
So you paying yourself is not necessarily what's going to help you. We'll be able to use a part of that income, but because you actually own the business, there's different calculations for you. Think about it this way. When you are self-employed, we know that it is a tendency for most self-employed people to write off as much as they can because it makes them very it creates a liability with the IRS. You owe the IRS money and nobody wants to owe the IRS any money. So most self-employed people write off everything. Well, from a lender's perspective, what you're basically saying is, yes, I made $100,000, but when I got through paying all my bills, all I had left was $2,500. And so if you tell me all you have left is $2,500 for the year, how are we supposed to calculate, a mortgage payment for you? So we could take this offline and have a different conversation about how to make sure you're positioned correctly in order to get that income. Because with you being the owner, we're not only going to look at you paying yourself, but we're also going to look at your cash flow analysis, the viability of your business. So it's going to be more than just one thing.
Absolutely. Lisa, will you tell them how to get in touch with you?
You can text me, call me. My cell phone number is 702-742-0623. Again, that's 702-742-0623. And my email is lfoster at amerifirst, AMERIFIRST.us. I'm going to go ahead and put my cell phone number behind my
Got
name
it.
so you guys can see it.
It's also in the comments. So if you have any questions for Lisa, please take the time to give her a call. I will put my contact information down here if you have some questions regarding the real estate market or housing counseling from NID, which is my housing counseling agency. Let us know. And for everyone, go to makehomespossible.org. Again, we're here for you. We will be here doing this Q&A session the last Saturday of every month. You'll get to meet some of the other coalition partners. It's not just Lisa and I, so make sure you get on the journey. Do not go spend your tax money on something else. Don't even spend your tax money on paying something off until you've talked to a lender so they can guide you on the best use for your tax refund so that you can get closer to home ownership. Don't just make the assumption that you should use it all to pay off this. Talk to a lender first so they can say, with this $5,000 or whatever that looks like, this is the moves that you need to make with that money to make it make most sense for a mortgage. So don't make any crazy decisions before you see us again next month. But in the meantime, we're here for you. We're going to put 25,000 Black families in households. It's not only for Black families, though. If you have questions, you want to take advantage of the programs, these are not new programs, you guys. We're not coming up with something new. We're just bringing the resources to the people who need them the most. These programs have been out for many, many years. So with that, thank you so much. We are going to end our session now. Be safe out there, make good choices, make great financial choices, and make homeownership a part of your 2020 goals. Thank you so much, everybody. Take care. Thank you so much, Lisa. Excellent information.